CPI is out. Ugh, another horrible day in the market. Inflation is unbelievable. However, I'm happy. I'm Lex. I'm your host. This is Options OBTV-Traders Workshop. And this oh my God! This is no laughing matter. This inflation is no laughing matter. I'm so bummed.
Well, when you're getting your clothes for free, I think it's not a concern for you.
Yeah, you see that
lovely hat from Orats.
Yeah, Orats gave me some swag. I don't know. I know we're not supposed to be laughing at this, but my goodness, this is horrible. Jason, what do you think? Tell me about it. It's up 0.6%, the core number.
Yeah. So core month over month is 0.6%. A lot of that was shelter. So, I mean, I described a while ago when, Lex, you probably got yourself a 3% mortgage if you even have a mortgage, or, people like me, we're not moving. And so because mortgages are so high, rents can raise to, mortgages and rents are in competition, and rents can raise if mortgage rates keep going up. So it's really the FOMC's rate decisions are actually contributing a little bit to inflation through shelter.
Where does this end? My goodness. I mean, it's every day I look at this market, which I try not to do very often because it depresses me. I mean, where's the bottom here? Is there a bottom? This is brutal.
Well, maybe this will get to the idea of a bottom, but I want to ask Jason with his statistician's brain what he thinks about the housing kind of component here, right? Because obviously that is like kind of one of the leading drivers here and whatnot. And, I'm not an expert in the methodology, but the whole idea of owner's equivalent rent, right? And that's generally like a lagging indicator that I've seen some commentary that suggests that like this is the type of indicator that's going to fall 6, 8, 12 months after or you're going to see the numbers fall 6, 8, 12 months, kind of later, after these sort of interest rate moves. So like, do you think, is that when we hit the bottom, when, we kind of see some of this stuff percolate through, or Yeah,
honestly, I think are you talking about a bottom for inflation or markets? Because there's two different things. But I think with shelter, I think with shelter, it's going to be cyclical as long as FOMC is raising rates, and they're raising rates pretty fast. But if they do stop, like they kind of said they, or slow down next year, that would almost fix the shelter mortgage rate increases. They also have not been selling their mortgage-backed securities so much. So I think I don't know. I think there's a lot of contributing factors, I think, to determine when a bottom would be for inflation or shelter inflation. But I know. I guess, Mark. If you want to come back to America, it's going to be more expensive.
I'm a seller on how many people are actually going to be able to stay in their houses, right? If we start seeing contraction in the economy, jobs are going to get lost, people are going to be forced to move. There's family situations or professional situations, not everyone can just hang on to their house for as long as they want to. So I think some of that inventory is going to have to come online.
Yeah,
that's very true.
What's the tenor in Europe, Mark? Besides the fact that you don't have any heat, because I see you're wearing a big sweater again.
So actually, I did find out that the heat is on here. My wife just turned it off. So we do have access to heat. We in this household do not have access to heat, though.
I gotcha. Okay, good. So that's not an issue right now, the heating in your neck of the woods?
Not specifically the heating. Electricity is, of course, a little bit more expensive. But right now, specifically in France, there's a strike at the gas pump. So it's not necessarily that energy prices are exploding. There's a strike for the workers, so no one can get gas. There's just straight up supply shock that two of the major gas, petrol station operators, their employees are completely on strike.
Oh, well, that stinks.
So I know that's not a problem for you, Lex, but for those of us that drive regular combustion fuel cars.
Yeah, I wouldn't know what that is, but. Yeah, I haven't been to a gas station in 5 years. Smells. Gas stations smell. They smell funny. Get it on your hands. Don't like that. So what do we do in this market option wise? Is there a favorite trade? I mean, obviously selling premium has probably been pretty tough, in this environment with the market moving 1.5% a day, it seems like, or more. Any good strategies that kind of pop up in terms of options positioning?
No.
The event ball strategy.
I mean, I could tell you what I've been doing.
Sure.
Oh, go ahead, Mark.
No, please go ahead.
No, I mean, what I've been doing is when the market, on my Volin stuff, when the market looks like it can sell off to the downside, I put on a calendar that's maybe 2-3% to the downside, and have that as a standard trade, since downside seems to be the default nowadays. So I put that on as like my core trade, and then try to identify individual stocks that I can, do little long gamma bullish trades or something that has like a positive outlook in Volland. And the other day I put on a Costco bullish position because it looked good in Volland and it rose, and then now it's gone. But but I always had that core calendar that's like, right now it's October, December. So trying to take advantage of a little bit of time premium there.
Gotcha. So let me ask a couple questions. Let's just clarify what that means, a calendar and all that stuff, to get the beginner definition. So I'm assuming you're selling front month, premium, and buying farther month. Are you ever doing weeklies and doing a little bit farther month and then rolling the short to the next weekly, and so on and so forth? Or is it always the monthly expiration you're using?
So typically what I do, I mean, right now I'm at the strike is at 3,400.
Okay.
I rolled down from 3,500 not too long ago, but essentially what I do is at expiration, I try to roll into maybe another 2 weeks.
Yep.
Or if we're kind of far away, I can roll it and make it into a diagonal, try to claim a little bit more premium. Yep. But that tends to be my core trade, and I roll it whenever we reach that strike. Like, at 3,500, I thought I had overnight risk, which apparently I did. And then, so I rolled it down to 3,400 before I hit the strike. So I just keep rolling it down when I hit.
Do you keep your long option set wherever that strike is? You don't roll that as well?
I sometimes do, because I mean, then I'm getting that same calendar. But I mean, it depends. If we're moving strong, like now, I wouldn't.
Yeah.
Why bother?
Yeah, I got you. So
it just adds capital. Usually what I'm doing is I'm pulling profits off the table when you're winning, because if you don't pull the profits, they're going to take them.
Yeah. So just as definition, what Jason's referring to, this calendar, it's buying or selling a mixed expiration, same strike spread, right? So in this case, Jason's selling a 3,500 put in the SPX and buying a farther outdated 3,500 put. He's long one put out farther. He's short one closer. So his unit risk is 0, but he's taking advantage of the theta in the front month because he's short that one. And as that one comes to expiration, he makes a decision to roll that out to the next expiration or somewhere out in time. And then may make a decision to roll the strikes down or up, as the case may be. Now that's a calendar. A diagonal is when you do the similar action and then you have a different strike on the back months. Okay. So you might sell the 3,500 and buy the 3,400 in the back month, or maybe the 36, depending on your delta bias or your lean, right? Mark, did you do a lot of these in your day?
Yeah, no, I actually think this is a really interesting strategy for this kind of market. And I run a similar flavor of it myself, right? Like taking advantage of that calendar risk. I tend to, instead of, I do a diagonal, but I like selling upside calls to fund my protection as a way to sort of, layer on like a delta kind of coverage against, typically a long equity position. So kind of, a diagonal collar, cross month, short call, long back month put. Use some of your short call income to finance that put. It generally keeps you, a little bit more protected. You benefit from the kind of selling on the steeper part of that theta decay curve. So you can, keep rolling and financing that by collecting that short-term premium.
Right. So what's a Nov? You said, Jason, Nov OC, right? 3,500 calendar. Is that what you said?
October, December. and I
Okay,
just
so
planned
what
on
does that,
rolling
what
those.
does that cost you? What's the price of that kind of a spread now? I mean,
Oh,
volatility.
I did it a while ago, so now the spread. I think right now if you do it on XSP, so 340 on the index that you talked about last week.
Yep.
Which I tried it this week. It's nice. I think
Good.
it costs like 850 something per spread for 3,400.
Okay, so $8.50
yeah,
price for that.
yeah, $8.50, which was 850. Yeah.
Yep, got it. Okay, yeah, that makes sense, I think. So, and that's in the XPS, the 1/10th product.
XSP, yeah.
XSP, sorry, XSP. I'll get that right. Have you guys been checking that out a little bit? XSP, has the volume and liquidity increased a little bit at all?
I mean, I noticed the liquidity is there. I think XSP though, it kind of I think they're using the SPX and SPY options almost as the more liquid way to hedge whatever is being done on XSP.
Yeah, I just I'd like to see XSP take off for more reasons than one. A, it's a 1/10th product. B, it's still cash settled. It has the components of SPX, but it's a little bit more manageable for the retail trader, right? At that price. So I think it doesn't cost as much in probably margin and commissions and all that kind of stuff to trade that product. But the pushback I've gotten from folks is that it's just not as liquid. The markets aren't so tight as they could be, or as the SPX is. Which I haven't done a study on that yet, but I'm going to look at it.
It definitely isn't as tight as SPX, but you get decent execution. So
okay, good. I'm going to start looking at that. I like the cash settle part of it too.
Yeah, me too. The tax
implications. Okay, good. Let's take a look at the markets. Mark, do you have the markets up by chance?
I do, and I was actually just looking at XSP, like as you gentlemen were talking, and liquidity here is pretty good. I mean, like even out to December, like you're only talking like a nickel or a dime wide in some of these, and like the near dated stuff it's significantly more liquid. So,
how's the volume? Any good? Can you tell?
I don't actually have a volume chart in.
It's only, what time is it? We've only been 20 minutes in the session. Anyone want to take the other side of my bet up on the day?
I knew you were going to go up on the day, and
on the day.
I don't hate the call. I actually think there's something to it. I think we had a decent amount of event vol. I'm surprised I'm tagging that word before anyone else here. Jason might have said it earlier, but
he didn't.
No, but seriously, like I think if there's any day where there's a little bit of a tailwind here, I think there's rational reasons why we could fade the Fed or the CPI reaction here. I think there are some Greek reasons why we could fade the CPI reaction. So I'm taking your side, Lex.
All right, I like it. Jason, you get the other side. Sorry, too slow.
All right, fine. I'll be the market maker.
Yeah,
I'll expand vol. I don't think it's necessarily a bad call either, because I noticed there were a lot of 3650 puts that were sold.
Mm-hmm. I was going to ask you.
I think that will kind of be a little bit of a gamma cluster going into tomorrow.
Wait, the dealers short the 3600 put, or they long it?
The dealers are long.
Oh, so that's a gamma. That's a gamma play.
Yeah.
They've got deltas to cover down here.
Mm-hmm.
So green is 3580, I believe.
Let me look.
And that's running. I'm seeing like a 4 delta on those calls.
Yeah. Ooh, I still like it. I really.
I'm a buyer at 4 delta.
Me too. I'm like, oh, maybe.
What's the price of that option?
It was like $2, 35.80, $1.20. Sorry.
Jeez, that seems. Let's go.
We've already come quite a bit off the lows. I see us down 54, and I think we were down as much as 75, 80 at one point, maybe.
All right. So I'm sorry, Mark. You said $1.20 or something like that for that option?
$1.20.
All right, I'm gonna buy 1,000.
Ooh.
Of course, it's in my head. I bought 1,000 because I don't have
to say 1,000 options or 1,000 shares.
No, I'm buying 1,000 at $1.20 or $1.80, whatever he said. I just put them in my head. I own them. I'm either gonna lose $1.20 times 1,000, or you'll see what I make. Right?
No, you can get in between there.
Yeah, you know, if it, I'll sell some of them out if we rally up there. Here we go.
I want to know what that little ghost rally was this morning pre CPI. I mean, with futures were up, the S&P futures were up like 40, 45 points at one point going into CPI. It was almost like the number got
this event stuff.
Right.
It happened last time with FOMC as well.
Right. The managers I've been talking to, the money folks, they thought this would be a big rally today for some reason. Although they didn't expect this number to be what it is, but I still feel that there's this big rally coming. I don't know.
3650 is my number. That's the gamma attraction for this whole the rest of this week.
All right. Well, there's not much of this week left. I can't believe it. Yesterday was Sunday in my head, and then it's Thursday already for real. This week just scraped on by, like just bam. It's Thursday, right?
It is Thursday. I hope so.
All right. Good. Okay, good. So we got a time spread idea, a diagonal we could toss in there idea. So what do you do real quick? We'll just chat about this real quick and then we're going to run. We've got Vega when we do this spread, right? And volatility is really high. Implied volatility is really high. Do we do anything to kind of, manage the Vega risk that we're going to have in this position? Or we just say, hey, we hope we collect enough theta along the way to offset that and like a musical chair, get my heck out of the long when I can?
I mean, typically, so right now, horizontal skew has been pretty flat. Like the term structure has been pretty flat.
Okay.
And it only toward, closer to the money, closer to expiration, do you start seeing that theta tail off or that implied volatility tail off to like a contango situation in the term structure, which is why my front month sale is so much sooner than my back month, because around that 1 month time frame, 2 weeks to 1 month time frame, that IV starts tailing off really fast. And so basically I count on that more than anything else. And also the fact that it is off centered. Like the point of the position is to be taking advantage of this slow bleed to the downside. So I mean that's what I do personally. But
this is a really tough market. And I mean, we've said it here before that just how well priced vol is these days. Up and down the curve even. And so that to me says you really want to be kind of carry neutral on some of this stuff, that I don't want to be paying too much and I don't want to be, collecting too much. So I think like it really requires like to the point about rolling some of these trades, right? Like you kind of have to actively stay on top of that, moving your back one a little bit further or up and down, moving your front ones, closing them out, like taking profits, like Jason was saying. Like it really requires being nimble in this market and small, because things are well priced. There's no obvious trade one way or the other.
Yeah. So that's a good point. So is there any way to, I guess I'm answering my own question. Is there any way to kind of ratio this so that you've got a short in the front month, a long and a half in the mid month, whatever, and then another short beyond that? So you're still going to keep your unit neutrality, but you're going to sell a Vega. If vol surplus is uniform across months, then you could take advantage of selling a little vol beyond your long, but you have to ratio somewhere, right, on the long side. Does that make sense? It's almost like a time butterfly of sorts.
Yeah.
And it doesn't have to be equal strikes either, right? So I wonder if that's a play where you can kind of, kind of manage some of your Vega risk that way, especially if you're going to be in the position for a while.
Correct. And I think another, we talk a lot about Greeks, but another important thing, I mean, when it comes down to it, it all is dollars and cents, right? Like your P&L is added up in, greenbacks. So staying dollar neutral is also an interesting thing, especially when you're both buying and selling, right? Like you want to watch your cash flows and, adjust for that too. So, it's not just about all the fancy, VAMA, and whatever other ones Jason's making up out there.
Okay, we got to run now. That's a great point, Mark. We got to run. And he does make up terms. I know it. The Dow's down 260, just so you know. So that's
a little bouncy.
from
Only
down 500, and the SPOOs are only down about 49 now. So remember, Lex jumps on the up on the day train. Here we go. We're gonna check in at the end of the day. So everyone have a great day. Good to see you guys. Stay warm and trade well. I will talk to you after this. Have a good one.
Happy trading.
You too.